If you owe back taxes to the IRS, you might think you're out of the running for a home loan. But here's the truth. Having an IRS installment agreement does not automatically disqualify you. In fact, if your agreement is in good standing and you know what lenders are looking for, you could still qualify for FHA, VA, conventional, or even USDA loans. So today, let's talk about what an IRS plan means, how it affects your mortgage application, and the smart steps you can take to move forward with confidence. Let's break it down. An installment agreement is a payment plan with the IRS. It says, I can't pay everything now, but I will in monthly payments. You agree to a set amount. The IRS agrees not to come after you as long as you stay current. Here's the key for mortgage borrowers. It's still debt, and your lender will factor it in, but handled correctly, it won't stop you from buying a home. When you apply for a mortgage, lenders look at all debts: credit cards, student loans, car payments, personal loans, and yes, your IRS installment plan. They treat it like any other debt. It shows up in your debt to income ratio, the monthly payment gets added to your budget, and then they check your payment history just like a car loan. So yes, you can still qualify, but you must prove your plan is valid and current, that your payments are on time, and the IRS will let the mortgage take first position. So you may be wondering, do the different loan programs handle tax debt differently? Yes, they do, and here's a quick rundown. For FHA loans, you must have a written agreement. You have to have 3 months of on-time payments are required, and the IRS must subordinate its lien, and the debt counts in your debt to income ratio. Conventional loans, on the other hand, there's no waiting period. There is required proof of payment in the amount and terms. It does count in your debt to income ratio, and subordination is required if there's a lien. VA loans are actually similar to FHA. Documentation is required, and the VA might also want a letter of explanation. USDA loans follow FHA rules. Expect a 3-month history and subordination. Translation: talk to your lender early, because the rules vary. Here's what lenders usually ask for: a copy of your IRS agreement, proof of your monthly payment amount, 3 months of on-time payments for FHA, VA, and USDA, and then evidence that any lien will be subordinated. If you just started your plan, conventional may still approve, but USDA and FHA usually make you wait 90 days. Here's where many buyers get tripped up. Federal tax liens take first priority, meaning the IRS lien would outrank the mortgage, and no lender is okay with that. So they ask the IRS to subordinate. That means the IRS takes a step back and lets your mortgage take first lien position. The good news, the IRS usually agrees automatically, especially for FHA, VA, and USDA loans. So if you're just starting your plan, FHA and USDA will want to see 3 months of history. No missed payments, not even one. Conventional loans, they're a bit more flexible. So if your credit and income are strong, you might still get approved without the history. Can you pay it off? Yes, but you must show proof, updated IRS documents, and a lien release if one was filed. Using gift funds or a personal loan, that must be approved and documented with your lender. Don't surprise them, talk to them first. If there's an old IRS lien and no payment plan, you'll need one. Lenders won't close until it's resolved. That means start a plan or pay it off. And if a lien exists, it must be subordinated. So here's your cheat sheet. FHA and USDA need 3 months of on-time payments. Conventional, there is no waiting period and it's a little bit more flexible. VA usually wants 3 months plus documentation, and all programs require subordination if there's a lien. The bottom line, yes, you can buy a home with IRS debt. Do you owe taxes to the IRS? Don't let that stop you from becoming a homeowner. With the right paperwork, a solid payment plan, and a lender who knows the process, you can qualify even with an IRS installment agreement. Want to know your options? Book a call with me today. We'll review your agreement, go over your timeline, and match you with the right loan program. And if this helped clear things up, hit that subscribe button for more tips, more answers, and fewer surprises on your road to homeownership. Click the link below and let's make Click the link below and let's make back taxes a speed bump, not a stop sign.